is Ellis Dudley. I'm here. It is January the 8th, 2023. What are you doing with your life to make your dreams reality today? Happy New Year. I can still say that. It is the 8th, so it's not too from the new year. Happy New Year. Time is flying by. Being too cautious is the greatest risk of all. Make your dreams reality now. Time is the number one currency. Use it now. Without commitment, you will never start. More importantly, without consistency, you never finish. Do more in this life. Welcome back to Cash Flow Junkies. We are here live, present on our journey to 3,000 strong, limitless badasses who will stop at nothing with building wealth for themselves and their families and leading their families into wealth and just changing their relationship with money. Today, we have Shawn Hutson here today, and we're going to talk about stock options. We are mastering the velocity of money on this channel. We love to put our money into some investments. We love to see our money grow for us at a quicker rate than the norm, right? So let's bring Shawn on. What's up, Shawn?
What's good with you, Ellis? How you feeling, man?
I'm doing all right. Welcome to Cash Flow Junkies. Let me go side by side. Bam. Now, today we're just going to have a conversation. I don't really know much about stock options trading. I went to EIU with Shawn Hutson. We used to play pool in our dining. What was it?
Our dorm.
Our dorm room. Yeah. And he used to kick my butt sometimes, led to him sometimes. But this is a good guy, and he is a teacher now, right?
Yep.
He's a teacher now, so he loves to teach. And I thought it'd be good for him to come on here and explain to you guys what stock options trading is, because I trade myself, but I do just a straight long, in my limit order, and get my dividends every month or every quarter. Options is a different beast, a different animal, and I'm interested in getting into it because they have that nice little premium at the beginning. Shawn was telling me before. And also, I reap the benefits of having a dividend. Isn't that right, Shawn? Is it something that we talked about? So walk me through kind of just a brief, like, what is a stock option and, like, how is it different? And if you want to kind of talk about, like, a basic, like an ET, I don't know if you want to go into ETFs or just talk about what a stock option is and kind of go through what you went through with me a little bit.
Yeah, I got you, bro. So when it comes to options, it's basically you get a chance to purchase shares at a certain price, right? It's you have the right, not the obligation, to purchase shares. So normally, like, let's say a call, okay? So let's say you log into your, I don't know, your Robinhood account, Webull account, and you interested in options, right?
Mm-hmm.
Most people start on the buy side of options. Okay, so when you want to buy a call, meaning you think the stock market is going to go up over a certain period of time, you buy a call. Okay, so call up. That's the way to remember it. Call up, right? So let's say Apple is at 120 bucks, and you get to choose an expiration date. Think about milk. You know how, like, you put milk in a refrigerator and it expires?
Yep.
At a certain period of time, so does options. Okay, so let's say you buy a call of Apple 121, right, for $121. Like the call is called the strike price. So you think that Apple will go to $121 by, let's say, Friday, right?
Okay.
So if Apple goes up, you can make some money because you'll turn around and sell that call. All right. Think about it like hot potato, right? You hold on to the potato, right? And then sometimes it get hotter and hotter in your hand. You got to let it go. Well, it's the
Yeah.
same way with options, bro. I'm dead serious,
Yeah.
because you don't want to hold on to your option to the end of expiration, if it's not even coming close to your strike price, because you can end up losing a lot of your money. The very first time I was getting into options, I lost, like, I don't know, $1,200 in a month.
Wow.
So you gotta be careful. So
And how did you? How did you lose it? Go into details really quick. How
Yeah,
did
I'm about to get into that right now. So
Okay, go
just
ahead.
like how I was explaining to you about expiration dates. Well, I was watching other YouTubers like In the Money. I don't know if you ever came across that channel, but In the Money also goes over options.
Yep.
And literally the name of his channel, In the Money, you should be buying contracts that are in the money, meaning Apple is at 120, so maybe you should buy a call at 120 or 119, 118, 117 because it's already there, right? But if you buying out of the money, that means you think it'll go up to 121, 122, 123, or so on and so forth. But your expiration date, that's what screwed me over. I chose expiration date like a week out, Apple will go to 130. Okay. Apple not going up $10 on a random week,
In 7 days.
unless they're talking about the new iPhone or the laptop or something coming out.
Yeah.
Otherwise, it ain't about to jump like that. It's
Sure.
not.
Yeah.
And that's what my mistake was, bro. I was choosing expiration dates like out 1 week. So I'll be holding on to that contract because my strategy of stocks is to buy and hold. I want to buy and hold forever. I don't ever want to sell.
Yeah.
You know
Same.
what I'm saying?
Same.
So with options, it's completely the opposite because the furthest you can go out is 2 years. All right. It's really a short-term thing. But that's how I
Yeah.
was losing money. I kept buying calls saying that a stock could go up, in a week or two, and it just didn't. So I'd be putting in $100, $200, $300, and just losing it because as you're holding on to those contracts, as it expires, every single day it loses value. Okay,
Yeah.
I didn't really want to get too much into the Greeks, but that's called theta decay. Theta, like in Greeks, the Greek letters,
Yeah.
theta. So like maybe the very first day your contract expired by $2, so you automatically down $2, right? And then the next day it might be $5, and the next day it'd be $10, then 20, then 50, then 100, right? You get on that last day and you don't sell your contract to somebody else,
Mm-hmm.
then you can lose it all.
USOL.
If it's yeah, that's how I lost. That's how I lost like $1,200 when I was first doing it because I just kept holding on to all of my contracts to expiration,
Mm-hmm.
and I never sold them. Like I just kept holding on, hoping that it'd come into money, and
Yeah,
then
that's my
I
fear.
made it out.
That's one of my biggest fears is just like buying something and having to do too much to it. I like to buy dividends and forget about it. It pays me every month, every quarter. And I just forget about it. When it gets cheaper and everybody's paying, I buy more of it. So that route has been for years and years and years. And the option side, I see it as an opportunity, but more risk, right? Because you have to pay more attention to it. But also their premium. Now talk a little bit about the premium. I don't know if you
All
got
right.
into the premium
So it's
that
actually a
you.
lie. I gotta before I start talking about the premium, I
Uh huh.
gotta hit the other side called the
Go ahead.
put. Okay. So remember earlier I said call up, right? So if you think something gonna go up, you get a call. But then the other side is put down. So just think a put going down. So if you think a stock is gonna go down, right? Put down, then you can make money that way. All right. But it's not just buying a call, buying a put, and then that's the end of the day. That's only one side of the spectrum. From the buying side, you got the selling side. Okay, so now I'm about to get into the premiums. All right, because you're probably not thinking too much about the premiums on the buy side, even though that is like the price in which you buy your stock, your contracts. That is
Mm-hmm.
the premium because you have to buy, you have to pay somebody to basically rent out those shares for the week or 2 weeks or however long until expiration. All right.
Okay.
Now, on the sales side, you're probably paying more attention to the premium because this is how you make your bread and butter. This is how you make your money. So, for instance, maybe you got 100 shares of Apple, right? So now, because you have 100 shares, you can sell a call, right?
Mm-hmm.
Ellis, what did I say about a call? Call goes what?
Cause up.
Up, right? So as the seller of those 100 shares, I get to make a premium. That's what I make. So let's say out of those 100 shares, I sell all the stock price is at 120 and you think it'll go to 121. So I write a contract for 121 for like
Mm-hmm.
$50. All right. So you're gonna pay me $50 or $100 to borrow those 100 shares. Okay.
Okay.
Now, at the end of the week, if the stock price don't go up to that 121 or higher, right? If it never goes up, your contract expires and you lose money, correct?
Yep.
But on my side, guess what? I keep that $100 premium or $50 premium on whatever the contract was, and
Hmm.
then the shares get returned back to me. So I get to keep doing that over and over and over again. All right.
Okay.
So that's selling a call. Selling a put is a little different. Selling a put
Carvana.
on
Carvana.
my side. You said what?
Carvana. You can use Carvana as your example.
Carvana, right? Because Carvana is going down, right?
Yeah.
So you think that Carvana is going to go lower, correct? So I'm gonna have to write a contract. I'm gonna have to write a contract for a put because that's what you think is gonna happen. It's gonna go down.
Okay.
Carvana is at like I don't know what is it, $2 right now, $5.
I
I,
don't
I
know.
ain't looked at it in about a week, but I
I
know it's
should.
down. So you say I think Carvana is gonna go down to 50 cents, right? So I write a contract, 50 cent put. You purchase it for $50. As Carvana continues to go lower, right? At
Hmm.
any point, you can sell that put contract to somebody else. That's how you make your money. You have to sell the contract to make your money. Or if it does end up going to that 50 cents or below 50 cents, you can make your money that way. But typically, most people just sell their contracts. All right.
Do
Now,
you have?
you said what?
Go ahead.
Now, on my side, remember I told you when we had those Apple shares, I had 100 shares of Apple, right?
Hmm.
Well, it's different on the put. On a put, I don't have to have those 100 shares, but I have to have the money for those 100 shares. So let's say Carvana is $2. I need 100 shares worth of the Carvana, so
Hmm.
that will be $200. So I'm using $200 collateral, right?
Okay.
In case the stock does go to that 50 cents or below, I will be exercised. Okay. Meaning you will end up making money. And then I have to sell, I'm sorry, I have to purchase those shares at that let's say I sold the contract at $2, right? You think it'll go to 50 cents, whatever. But I would have to sell, I would have to purchase, my bad. I would have to purchase those shares
Okay.
at you know what? I made a mistake. I made a mistake because I said that I would write a contract for a 50 cent put, correct?
Hmm. It'll be two,
So
right?
I would have right. I would have to have the money to buy 100 shares at that 50 cents.
Okay.
So that was my mistake. My bad.
You good?
If it becomes lower at that point, I'm still buying at that 50 cent mark. So let's say Carvana goes to 10 cents, right?
Hmm.
I have to purchase 100 shares at 50 cents for every contract that I sold. So that's how I end up losing money.
Okay.
It's
So
the
what?
same way with a call though. Let's say that the call ended up going up and I sold Apple at 121, but Apple will shoot up to 150, right? I would have to sell my shares because my shares were collateral
Yeah.
at $121 each. So that would be what? 12,100 bucks. But the stock went over. So I lost out on that money because I had to sell my shares.
Yeah, this is definitely like clear what you're breaking it down. But with me, I just can't get over the management part. Is there a way or a like parameters that you have that you keep? Hey, when I want to buy a call, or go long in the market, I have a 30-day parameter when I want to
Yeah.
exercise. Do you have a certain approach that you use when you go about things?
So like I said, it's all about what side you're on. Are you on the buy side or are you on the sell side?
Hmm.
So Ellis, if you're on the buy side, you want to buy a contract as far as you can because that gives you less risk.
Yes.
Okay.
Hmm.
The lesser the contract is, the more risky it is for you. Because the faster it expires, the faster you can lose your money. You get what I'm saying?
Yeah, I know that.
So if you go out 30 days, you might have to purchase that same contract at a higher price because you're not taking on as much risk as you were when you were buying a contract for 1 week. Okay.
I get you.
All
I
right,
get you.
cool. So let's say you buy a contract out 2 years from now, right? Remember, I said the contract can go as far as two
For two
years.
years.
That
Yeah.
would be more money on that you would have to pay in premium.
Okay.
But you have way less risk because the market can do anything in 2 years,
So would you
right?
say that's your sweet spot and how you use option trading?
That's on the buy side, Ellis.
That's what I'm saying. Are you on both sides?
No, I don't. I don't play the buy side no more. I lost. I lost $1,200. I'm good. That don't work for me.
So he's
Nah.
telling us, guys, the buy side ain't where it's at, especially
I
right now
mean,
with
no.
the bear market.
Some people can take that risk and make a lot of money. I'm not one of them. That's not how I do things. I want the least amount of risk as possible. For me, I love the sell side. Okay, when you talk to people about options, most people are talking about the buy side. I
Yep.
stick to the sell side. So I'm not selling contracts 2 years out because that increases my risk. It lowers yours as the buyer, but it increases mine as the seller because I don't know what's going to happen in those 2 years. Yeah, I can make more premium in those 2 years by selling that contract, but I don't really know what's going to happen. So what I do as the seller of contracts, I like to sell my contracts a week or two out. Some people go as much as a month, but I don't ever go over a month.
Okay.
I never sell contracts out further than a month because I want the risk to be as low as possible for you so that I can make as much premium on my side.
Okay. So you actively like kind of looking at this stuff like every 2 weeks? There's something like popping up
Um
on your phone where you're like, oh, this is being exercised at this point. How
so
actively are you managing your portfolio? With,
so I take a look at my portfolio because I sell my contracts every week or two, right? I'm looking at my portfolio just like maybe once or twice in a day, just to see
okay.
how things are going. So, for instance, I'm focused on a Nasdaq right now. Since we're talking about ETFs, right? I've
Yeah.
learned after losing some money to sell contracts in ETFs opposed to individual stocks because I had end up holding the bag on one of the individual stocks that I had. Okay, so
Yep.
now I'm doing ETFs because it feels a little bit more safer for me. All right.
Yep.
I'm doing TQQQ, which is still a little risky because it's a leveraged ETF. It's times three. So QQQ, which is an ETF of the Nasdaq, right? It follows what the Nasdaq does, QQQ. But I do TQQQ, and that's times three. So whatever happens to the Nasdaq, like let's say the Nasdaq go up $1, TQQQ goes up $3. All right. But if it go down $1, it go, TQQQ go down $3. So I normally do that because I want that volatility because the volatility is what creates a greater premium that I can make.
And you still get that
So
premium
if
on the sell. You saying?
yeah. So
Okay.
I look at the market in my Robinhood maybe one or two times every day. And okay, I'll be more specific. I'm gonna get into a little bit more
Yeah.
details because it's easier for me to just talk with actual numbers. So I'm gonna open up my Robinhood right now. Okay, give me
Yeah, why
one
you
second.
open it up? I look at my stuff every day too because I want my cash to grow. So you ain't alone. I
Hmm.
be every morning. I be on my computer, Charles Schwab. What I said my account. So I agree. I get you. I get you. But yes, option
All right.
trading has always been something that was new for me. Go ahead if you got it up.
Yeah, I got it up. So when when I was doing when I was selling a call, okay, when I was selling a call a TQQQ, it was around $25 or something like that.
Mm-hmm.
$23. And I ended up selling three contracts. All right. Remember, every contract is 100 shares, right? So I sold three contracts and I made like $100. And and my strike price that I chose was 22. So I was winning that, right? Because I
Mm-hmm.
expected it to go down because of everything that's going on with the market. Well, what ended up happening is it went way lower than I expected. I expected it to only go down to like $22 or $23, and I'd be able to keep that premium. But what ended up happening is it went to like 21, then 20, then 19. And TQQQ right now is at 1760. So what ended up happening was I had to purchase 3 contracts at $22, even though the stock price right now is 17. I had to do times 100 of 22, right? So that'd be $2,200 per contract. But I sold 3. So that'd be $6,600.
Yep.
All right. So I had to put up $6,600 in order to purchase 300 shares of TQQQ, and now it's at $17, 1760. Okay. So right now I'm in the red, correct?
Yeah.
Because I
So
bought
what
I
do
bought at
you, go
22
ahead.
and it's at 17. You said what?
Where do you realize the gain there? Like when you purchase you repurchase the tracks. When do you
So
realize the gain? I'm a little
right now, technically I'm at a loss because the stock price is lower than what I bought in. So I'm okay with that because all I gotta do is hold. I can hold forever. Remember, that's my strategy. But right now, I can't really write any contracts. I can write contracts. So if I bought at 22, I can write a contract anywhere. But here's the problem, Ellis.
Mhm.
If I write another contract with those 300 shares, let's say I write a contract at $18 right now, right? What ends up happening if the market does go up over that 18, I have to now sell my shares at $18. I don't want to sell my shares at $18 because I bought them at 22.
Mm-hmm.
If I end up having to buy those shares at 18 when I bought them at 22, I'm gonna realize a loss. If I want to realize a
Yeah.
gain, if I want to realize a
But
gain,
I thought you were on the sell side, so
I
wouldn't you be
am.
shorting?
So no. So shorting
That's
is a
what
whole
confuses me.
different thing. Like
Okay.
shorting is
Okay.
something totally different. Yeah.
Okay. That's why
Um
I'm getting confused.
I'm simply letting people basically borrow shares, and then if it works out for me, what I want to happen, Ellis, if I'm buying if I'm selling a call, I want my contract to be below that, right? So if I don't want it to go over because no, I'm sorry. If I'm selling a call, I want it to stay above. So that way I
Exactly.
can
Yeah.
make the premium, and I like to get my contracts exercised. And then I turn around and then use that capital, the cash, to turn around and sell a put. So that's
Mm-hmm.
normally how I do things. Like the way I do things is a little bit more complicated than the buy side. I liked my shares to be exercised
Mm-hmm.
because I can make money from the premium, and then I can make money from, like, if I sell a 22, right? A 22 call and it go to
Mm-hmm.
23, I made money from the premium of actually selling that call, and then I get to sell my shares at that 22 as well, right? But then
Mm-hmm.
I wait for the market to go down, and then I turn around and sell a put. And then if it goes down a little bit under that, I'm okay. I get exercise. I'm forced to purchase it. I'm forced to purchase those shares.
Okay.
If it go down a little bit, and then I turn around and I bounce it off. I keep bouncing it. That's all I do.
You
Like,
just
yeah, I just
after this,
constantly buy and
yeah,
sell. I mean,
yeah. After your major
sell calls and puts. My bad. What'd you say?
loss, like how I guess profitable have you been? Have you had any more horror stories lately, or has it been all peachy with your
Nah,
approach with
I'm
the
I'm
option
I'm good.
trades?
Like, yeah, I'm good. The worst right now
You
is
good at
that
it?
I
You
bought the
mastered.
shares at 20. You said what?
Okay, I say you mastered it at this point.
I wouldn't say master. There's always something to learn, you know. And the market will humble you. Trust and
This
believe
guy's
that.
freaking humble, guys. Y'all
I'll
hear
offer
this guy? He's so humble.
Yeah, but
Maybe
like
that's
right
why I don't
now,
have any friends over. Go ahead.
yeah, like right now, I'm good. Even though I'm down because I bought my shares at 22 and it's at 17 right now, I could just hold on till the market goes back up. I don't have to realize those losses at all if I just hold on. When I sell my shares
So
at a
within a
loss,
year,
you said within a year, what now?
say if I had within a year, say if I had 10 grand, I wanted to, $1,000 and I wanted to put it into it, doing options. For me, I can calculate my return based off the dividend history, steadfast dividend history. And I can say I can make between $30, $40 throughout the whole year. Can you do that with options trading? Can you say if I invest this much here, or is it kind of depending on what you invest in? How can you invest that way? Can you take $1,000 and say, hey, this is how much yield I'll if I invest this way? Is it kind of like that or no? Or is it
I
kind of
see what you're saying. It's a
you get?
little bit it's a little bit different for me because it all depends on what happens in the market.
Mm-hmm,
And like if it goes up, I'm normally eating up. Like I'm making money. And when it
yeah,
goes down, sometimes I can lose some money too. Sometimes I can lose money on the way up because I thought the market would go back down, but then it continues to go up. You get what I'm saying?
mm-hmm, yeah,
So it's different for me. It's a little bit more complicated to explain my returns, but I do create goals. That's really what I do. I create goals. So like my goal is to make at least $100 a week off of premiums.
yeah,
That's my goal. So if I can make $400, a month, I'm cool with that. If I make a little less than 400, I'm still okay with that. But my goal is to make $400 every
in
single
America,
month.
yeah, America has its bad parts, but this compounded interest is great. If you know what you're doing with your money, you can do quite well. So, Shawn, when you start your academy for options trading, we're definitely going to subscribe and definitely support you. I'm definitely going to be in touch with you more about this to learn myself. You've been a blessing with sharing, your knowledge about options trading so far to my circle so that they can get a little bit more information. I have a buttload of information having you in my corner, so I'm be hitting you up and when I'm ready to execute. But again, I like to really understand, and I don't know, is there a point where you really understand this stuff to where you're like, okay, let's do it, or is it kind of like that thing where you got to invest in real estate and just go out and buy a house and hope that it works. And then,
Um, I mean, I've been doing options for about 3 years now,
okay,
and like I said, I'm still learning. Like
yeah,
you're gonna make mistakes. Uh, I watch a lot of Earn Your Leisure, and in
yeah,
Dunlap always talks about like creating a dummy account with the fake money and just practicing,
yeah,
right? And that's the best I can say. Like just practice, but it doesn't matter because even when you practice, bro, and you start putting in your real money because you feel like you mastered it, you still gonna make some mistakes
yeah,
because emotion is really what makes you lose a lot of money, man. Because you get scared. You get scared if the market ain't going the way you think. So you start realizing a lot of losses. So you got to just basically create a plan and stick to it.
yep. I feel what you're saying. Create a plan, stick to it. Man, stock option trading is still a mystery to me. I'm not going to even lie to you, man. I'm getting it down. I just wanted my circle to hear what you have to say about the matter, and definitely putting the pieces together with options trading. I'm doing it myself. But dividend stocks right now is probably what I'm gonna stick to for the better part of this year. But I'll get stock options trading down if that's something that I wanted to do to advance my cash flow because I love cash flow. And for those of you guys who watch it, you love cash flow too, right? So definitely check out Shawn. Shawn is a humble teacher. I don't want to dox him or say his school or anything like that, but he's a humble teacher. He doesn't want to be famous or anything. Shawn, you got like an Instagram or anything, or
All I got is
names.
Facebook, man. You can just follow me on Facebook. I don't got a bunch of social medias.
This
I'm
guy,
good.
this guy's humble, guys. Well, Shawn Hutson is his name. His name is in the description. Go ahead and look him up and support him and be a blessing to him. Shawn, thank you for coming out to Cash Flow Junkies, and I'll talk to you soon, brother. Thank you for
All
coming
right,
up.
bro.
All right,
Appreciate you bringing me on.
no problem. Ciao. That was great. Go ahead and log on to DudleyAccountingServices.com. This is our website for Dudley Accounting Services for tax and accounting for real estate investors or small business owners who are seeking the master plan and tax and master plan for real estate investing. And we get a lot of people from who are not in real estate, like barbers, beauticians, and people who just don't have their stuff in order. It is tax time. Go ahead and get on our calendar. Let me show you how you can get on our calendar here. You can book a free 10 to 15 minute discovery call here, and we have it available for you can book out the time and date, so everything is really systematic, and you'll get an email sent to your email address, and we'll lock in and see if everything is aligned. You stay tenacious. You remain unstoppable. You tenacious badass. You hear me? See, I almost fucked it up, but we're good to go. But I'll see you guys next time. Peace.